Hello and welcome. Today I'm joined by Umeshkumar Mehta. He's Executive Director and CIO at Samco Mutual Fund. And together we'll dive into the newly launched Samco Multi Asset Allocation Fund. Welcome, Umesh.
Thank you.
Now, to begin with, could you explain the Samco Multi Asset Allocation Fund? What is it all about? And give us an overview of your unique R.O.T.A.T.E strategy. How does it dynamically allocate between equities, debt, and gold?
Yeah. So currently multi-asset as a category, almost everyone is following a static approach, around 15-20% in commodities, 50-55% in equity, and 20-25% in debt. So this is a static approach, and typically an allocation is done across three asset classes. What Samco's R.O.T.A.T.E model does is it will identify which asset class is doing better and will completely rotate towards that asset class. So typically when equities are down and gold is up, so it will move up to 70% in gold, and if equities are up, it will move up to 80% equity and not typically 50-55% equity that we see. And if gold is down, equities are down, then make it like an arbitrage fund. So debt arbitrage fund up to 80%, it will be debt arbitrage fund rather than just keeping 20-25%. So whichever asset class is performing, make that fund take that asset class up to maximum permissible by the category. So this is R.O.T.A.T.E strategy, and this is unique as far as this in the category the multi-asset allocation funds is concerned.
All right. So like you mentioned, unlike traditional multi-asset funds, your fund dynamically shifts between market trends. So what are the specific indicators or trends does your R.O.T.A.T.E strategy rely on to determine when to increase the exposure to equity or gold or debt for that matter?
Correct. So technically asan hai, to shift it, but that has to be done. So we have coded this and we use 6 parameters. So those 6 parameters are basically relative strength, volatility, trends, averages, volumes, and earnings yield. So when we mix of all these 6, we'll identify whether to go into equity or to go into gold. So that is by default. So basically, this is how the R.O.T.A.T.E strategy will identify which asset class is heavier or which asset class is doing better, and that is how the mode will shift from either gold to equity, or if not gold equity, then to debt.
Okay. And in the equity mode, the fund targets stocks in an uptrend across large, mid, and small cap categories. So could you share the specific criteria you use to identify these opportunities, and how do you manage risk and balance exposure across market caps?
Yeah. So once in equity mode, so before coming to equity mode, again, let me tell you, so once the mode is decided, either gold or equity, then how much gold and how much equity, right? So that our trend identification model will identify. We will be using, we will regress on both the asset classes and then identify the slope and angle, which asset class is stronger. And by using time series and cross-sectional indicator, fix that, look, this is the kind of weight that we need to allocate in the current situation for gold, equity, etc. So once that weight is decided, then if it is equity mode, then we will function like a flexi cap strategy. We will look into all 500 stocks and stocks that are doing better in terms of earnings growth and also in terms of price action. So we will have quality parameters and also price volume parameters to identify stocks which are doing better compared to the rest of the pack.
Right. Now, you mentioned that during market downtrends, the fund significantly increases exposure to gold and debt. So how do you ensure these allocations effectively hedge risks, and how do you adjust your risk tolerance to balance safety with potential returns?
Yeah. So if you can just enable the screen share, I will share, how practically this works, so that it becomes absolutely clear how this R.O.T.A.T.E strategy will be able to dynamically manage asset classes, how it will move in and move out. What is the expectation that investors can look into as far as the return profile is concerned, the drawdown, and in various time frame how this fund had occurred. So if I may, yeah, thanks. So what you see on my screen is we have tested this since last 20 years. So during global financial crisis, the yellow line that you see, the yellow color is the gold mode. So it went up to 70%, and then the green is all equity, and the blue is the debt arbitrage mode. So in 2014-15, when Narendra Modi government came back for the first time, it was all equity, 100 up to 80% equity. COVID times, in COVID times also, if you see, briefly gold had gone into 70%. This went into 70%. So this is, and at times the fund has also gone into debt arbitrage mode. If gold is down, equities are down. So this is how dynamic management this multi-asset allocation fund will have. So this is a 3-year rolling return profile. The blue line is the Samco Multi Asset Allocation Fund. In no 3-year rolling period they were given a negative return. So if you see absolute gold alone has given negative return. Nifty 50 has also given negative return on a 3-year rolling period. So this is how the drawdown profile is much superior and also on the upside. And let me show you this. This is a US. In US, those who follow the rotate model, this is the kind of return. The red line is the Standard and Poor buy and hold strategy. The yellow is the gold buy and hold. The blue line is the rotate strategy. Whichever asset class is performing, they will shift the asset, they will make the fund of that asset class. And this is how this kind of superior return profile happens. And this is the drawdown protection. This is how risk management will happen. The blue line is the Samco Multi Asset Allocation Funds model drawdown. The yellow is the gold and the green is the equity. At times, equities are down, this fund will be out of equities. Even if gold is down, the fund will be out of gold and enter into debt arbitrage mode. So this is how the drawdown becomes all the more superior because of each asset class. If the asset class is falling, either gold or equity, it will move out. And if both are falling, this will become a debt arbitrage fund. So this is how the drawdown protection will happen. So yeah, I think this is how this fund will dynamically manage asset classes for investors.
If you could explain a little more, what are the key benefits of your dynamic multi-asset strategy for investors, particularly during the periods of market volatility or economic uncertainty, as you mentioned, COVID times, and how does it aim to safeguard returns in such times?
See, when volatile times are there, actually, this is where the multi-asset as a category will help because whichever asset class will work, obviously money will get allocated, and we have 2.5, 3 years of solid bull market return. If equities mean reward, then obviously there will be drawdown, correction, etc. But in the meantime, if gold moves and makes an uptrend, obviously this fund will become a gold fund, which nowhere these investors will be able to get this type of asset. And if nothing works, if gold also falls for whatever XYZ US does, then obviously 7% net return is what that investors can expect. So I think the beauty is whichever asset class works, you keep on holding. वो जिसका पलड़ा भारी आप वो asset class बना के रखो and get up to maximum. So I think this is how one should look at as far as the risk-adjusted returns are concerned.
Okay. And during market downturns, what strategies does the fund employ to minimize the downturns and drawdowns, and how do these strategies differ from traditional asset allocation models?
Correct. So we are trend following, right? So in trend following, once the market starts falling, we will get out of market. वो कहावत है ना, हर आग की शुरुआत एक चिंगारी से होती है. The moment there is chingari, it's time to get out because no one will know for sure whether this spark will become a bigger fire. If the spark does not get into fire, again we will get into that asset class. So basically, when we have trend following model, so for example, if equities are down by around 8-9%, so we will not be able to obviously say get out from equity at the top. But once we leave 2-3% on the table, and then we will move out. And assuming for the sake of argument, SEBI does not allow Bitcoin, but just for the sake of understanding, if we enter into Bitcoin, right? So we get out of equity, leaving 2-3%. So if Nifty is down by 8%, 3% we will leave on the table. So 5% drawdown protection. We will get into Bitcoin. We will not be able to get into Bitcoin at $48,000, maybe $51,000, $52,000. So when we enter into Bitcoin, today Bitcoin is 95,000. So the portfolio doubles. So this is how the beauty of multi-asset is what? That at times you replace currently Bitcoin with gold. Gold has inverse correlation. And when gold has inverse correlation and equities are down, this becomes an awesome category as far as the return is concerned. And the return profile for investor becomes, like the curve becomes smoother. Because if equities are down, no matter what we do, whichever category, the funds will be down. But the beauty is multi-asset. The beauty of multi-asset is it has drawdown protection, and whichever asset class will work, the upside is all open for the investor.
Right. So who do you think is Samco Multi Asset Allocation Fund is best suited for? Would it appeal to risk-averse investors or those seeking diversification or individuals looking for a balanced growth strategy over the long term? Who is it?
So just before I come to that, let me share one last slide as far as the beauty of one hero asset that we have forgotten, and we have forgotten especially since the COVID times, because COVID, it is all about equity, and actually we have forgotten this hero asset. So this hero asset is gold. So in last 50 years, gold has its own bull and bear phase. So the first bull market, the gold had become 25x. Then there was a side lull, and then it had become 8x, and then it was a side lull. Now gold is only up by 2.5x. I think this all central banks across the world will understand that, look, hey, this is time to get into at least gold. If you don't want to fight US, if you don't want to get tariffs, at least keep on increasing our gold exposure. So in our mind, gold is in a mega bull market, and Samco's multi-asset allocation is the only category as far as which will get into completely up to 70% gold. And this is for every investor. See, in India, every investor loves gold, and no one, and everyone wants to also time it, right? Because gold also has long sideways history. So this fund, I think the upside of gold will be captured, and up to maximum up to 70%. And upside of equity will also be captured if a market enters into equity. So I think this is it's a go-to category, go-to fund for every investor class, whether it is risk averse, whether it is basically aggressive. But the most, this is for everyone who loves gold.
All right. Well, with that, let's wrap up this discussion. Thank you for sharing your thoughts and perspective with us today. It's been a pleasure talking to you. Thanks.
Thank you.